Hey, good morning. Let's go over today's trade plan. So in the overnight session, our larger time frame bias continued to be bearish, and ES ended up trending lower all the way down towards the 72 quarter support, the overnight low being 71 quarter. So it poked a little bit below that zone, but that is a zone where responsive buyers have been defending and have been active. At this point, heading into the open, we know that the bigger picture bias continues to be bearish. There is a lot of selling pressure in this market, and even though we have seen a reaction at that 72 quarter area, it doesn't mean that ES cannot head lower. Now, the challenge with today is that we're opening on a very large gap, and the risk is that majority of the move may already be done. So the market is quite weak. It can go lower, but at the same time, this area, 71 quarter, 73 quarter, and even around the 74, 75, this is a decent area of support. And that's why we've seen some pretty decent reactions at that area in the overnight session. But the risk is that the reactions may have already taken place, and now if we continue to trade at these lower prices, it can lead to continued liquidation into the 63 quarter, 65 quarter, and possibly even all the way down into 52.75 to 55 quarter, which is the next strong area of support, and that would also be a range extreme where ES would be very exhausted. So the challenge this morning is to monitor the ES and see whether there is some decent buying coming into the market. The challenge is going to be that it's not going to give you the best location now on the long side, right? The best location was 72 quarter, the bottom of that zone, and we've already seen reactions at that zone. So given how much selling pressure we're seeing in this market, it makes sense to be cautious on the long side. And the simpler trades are going to be on the short side. The primary area of resistance on the upside here is 84 to 87, and that's an area where sellers can be active on first test and they can defend. And then beyond that, we have resistance at 91.5 to 93.5 and 96 quarter to 98.75, and the sell side can be active at each of those zones. So as long as we're not getting any major upside momentum on the NYC tick, so as long as we're not seeing larger time frame buyers jumping in a very aggressive way, the simpler trades are going to be to look for short setups at the key resistance zones and then expect ES to, at the very minimum, balance at lower prices and possibly even put in a bigger failure and go down into that 63 quarter, 65 quarter zone and possibly 52.75 to 55 quarter. Now, in the event that we do end up heading lower, the 52.75 to 55 quarter is a zone that can cap the downside, and we can actually get a pretty decent sized bounce off that area. So that would be a good spot to start looking for longs. And even at the 63 quarter, 65 quarter, we can get a reaction. 59.75, we can get a reaction. But the 52.75 to 55 quarter is the strong area of support and pretty much an automatic buy on first test in the event that we go down there. So heading into the open, be mindful of trade location. You don't want to get involved in the middle of a sideways balance, even on these smaller time frames. So, even on the short side, we want to get some better location to short the market. 84 to 87 is going to be the first spot that really gives, very decent trade location. And ahead of that, there is some resistance around 81.5 to 82.5. So depending on how the market gets there, that may be a spot. But from a location perspective, selling down here is an aggressive move. And unless we're seeing some pretty good downside momentum, so negative NYC tick and the NYC tick sustaining and holding below zero, it's going to be risky to initiate a short right near this larger time frame area of support, right? So shorting the market here is going to be risky. The better way to do it is to wait, be a little more patient, and short it on a bounce, and only if we're not seeing any major upside momentum. So anytime the market's opening on this big of a gap and such a big move has already taken place, it is a more challenging market to trade, and it can be frustrating too because such a big move has already happened, and feels like you've missed out on an opportunity. But if the overnight session is not part of your trading plan, not part of your strategy, then you can't really see it that way. You can't think of it as a missed opportunity because it's not even part of your system. It's not even part of your method. It's just a move that happened. So going into the day, be a little more centered. Make sure that you are not jumping into a trade that is too aggressive and doesn't really provide you with the ideal reward to risk, where you can at least have a decent shot of allowing the market to work in your favor. You don't want to be involved in trades where the idea is good. Let's say shorting the market, the idea is good, but the execution is not good enough, and you end up getting stopped out, and then the market actually does go your way. So be a little patient this morning. Allow the market to give you some more information as far as whether that larger time frame buyer is stepping in or not, and then make your decision from there. Give it a little bit of time to stabilize a bit, or at least provide you with some data that you can use to put on a smart trade. So those are the main thoughts heading into the open. Our focus is going to be on the short side, and we're going to be cautious down here because we're at decent support, but our focus is going to be on short side today, given that larger time frame bias and given the strong selling pressure in the overnight session. And then in the event that we do go down into those decent areas of support down near 52.75, 55 quarter, or 59.75, then perhaps we can consider trading the market on the long side because it would be quite exhausted there. But aside from that, we're going to look to short any bounces and expect the market at the very minimum balance at lower prices and possibly even head lower and continue the sell-off that has already taken place in the overnight session. So those are our main thoughts. Let's see if these sellers can maintain this control, and we'll take it from there.